at least immediate results, we still have a risk in the trade because, but you know what? Notice something. We're in from here. It's still higher assigned value, even though we have a red candle. What do we notice about that red candle? Well, let's examine. We have a higher high, correct, from here. We have higher highs, correct. We have a higher low, correct. And so, remember we identified a trend, and isn't that what we want to see? Higher highs, higher lows, and then we want to see what? Higher closing highs? Incidentally, isn't that what we have right there? Higher closing highs? Now this trade we're in at 133.65, notice that within, and this is a 5-minute candle, so notice that 5, 10, 15, 20, 25, a half hour later, we're up a nice 20 pips at least. So a nice little sweet breakout trade without taking any heat whatsoever. So I've got news for you. I think if you follow these types of patterns and you follow the rules, because they're very hard not to follow. You buy on, you have to wait for the close and then buy on that closing time period, or of course the open of the next session. It's pretty much one and the same. Place your stops below the doji low on a stop close only basis. Let's take a look at this. This is more recent history, of course, with the Genesis platform and with our indicators. Now, neat thing about this is that a lot of people like to take sell signals, and they think as they get close to a support, and that's what this line is. This is your pivot point support. They want to start looking at sell signals at support. Wouldn't it be more fruitful to look for maybe buy signals at support? Take buy signals at support? How about looking for a high close doji? Dojis form at or near the low of the session more times than not. Dojis form more often than not than they do at pivot points. And here we have, this is March 3rd of 2006. So again, we're showing you charts from years past, months past, weeks past, and of course, right now, as a more recent history, here's a great trade and a perfect setup as we see the market take off in a high close doji fashion. We have our moving average components. The market closes what? Above the doji high, above the moving averages, and the market closes above both moving average values. What do we see ensue? Higher highs, higher lows, and the market takes off. And until we start to look at, as we're near the pivot point support or resistance, as we're near pivot resistance, notice what we have here, another doji. So we're starting to see signs that this market trend may weaken, and so here's what we want to do. At this point, you see a market making a lower closing low. What do we want to do? Scale out of partial positions. I would personally be scaling out of half my position. That means from here to here, I took a nice chunk of the middle out of this trade. And that's very respectful. I can at least now move my stops to break even on the balance and let the trade ride. As we start to see the market, though, hit its maximum pivot point resistance level, we can probably accept the fact that that's going to be about the end of the run for the day. And therefore, we want to start getting out of the trade. It's always best to get out on the highs than it is on the lows when you're balancing out your positions. Remember, we talked about identifying who you are and what you are as a trader. If you're a day trader and you're not going to hold this overnight, if you're not going to hold this into the next day or next 24-hour period with the Forex, then do yourself a favor and capture a profit, because on one full-size contract, that's a nice $630 gain. Total profit on a single lot. Right here, $630. So that's how you effectively would look for a trading pattern. That would be what you're looking for in a trade and how you effectively manage that trade. Let's take an example here. The prior example was a British pound. This is a euro currency. Let's take a look at this. Also, notice that we have the doji patterns forming. Notice that we have our pivot point support. We have our pivot point resistance. We have our Genesis software indicating buy signals, that there's strong momentum, that there's big demand under the market. And that's the neat thing about this. Notice here we have a major crossover to the downside. Once again, even using this type of methodology where we're using the market's momentum in our favor, buying high close doji signals, as you see here, buying on strength as against the pivot support and risking closes, even if you got out of, as you start to see the market turn against you, even if you got out of half your positions and let your balance ride at break even, you're still in a position. But more importantly, you get another opportunity to see the high close doji as it's disguised over here, and this is what we're looking for. We're looking for